Hi, this is Scott Schubert. It's March the 16th, 2011, and right now, today, economists, traders, technical analysts, and Elliott wave analysts are looking at the financial markets all over the world, and I'm sure there are many people who can see that if you look right now at the Dow Jones Industrial on the monthly time frame, this entire movement up that's been going on since around March of 2009 has actually formed a three-wave correction that is near 78.6% of that entire move down. And when you look at it on the weekly, you can see that the first section formed a perfectly clear five-wave pattern, then a correction, and now this section has formed five very clear and distinct waves, and now it is turning down. At the very least, we should be now seeing a correction to these five waves up on the weekly, but if this is an ABC correction going up to 78.6% of that entire movement down, the implication is that the stock market is about to turn down and go past 100% of that entire move up for a huge drop that would be likely to be equivalent to the crash that happened back in October of 2007. If you look at the New York Stock Exchange, the monthly time frame has that same distinct pattern. The weekly time frame has the same distinct five-wave pattern that is now ending. The S&P 500, the same distinct pattern, and the same distinct five waves are in these trends that represent the A and the C, which you can see on the weekly. Very clear. The NASDAQ has the same three waves up, and this one is turning right at about 100% of that most recent move down. On each of these, this could still be an uptrend, and what happens next could just be a correction to the most recent five-wave section that we see on the weekly, but the implication is that it's very probable that this move down is going to go past 100% of that entire move up since April of 2009. Now, if you know anyone who invests in the stock market, this would appear to be a very poor time to be buying, but would be a very lucrative time to be selling in the stock market. What's also very important is that the US dollar moves in inverse to the stock market, which would mean that the US dollar could be in a position to now begin a path of strengthening against other currencies. And of course, if what it appears to be happening here really is in the process of happening, that would be very terrible news for the US stock market. But if you're trading in Forex currency pairs, every move of the market on any currency pair up or down is a profit opportunity, and we simply want to know which direction it's going on which time frame. So although people who are involved in the stock market see this as a very negative thing, and there's a lot of negative emotion associated with the stock market going down. Last time there was a big drop in the stock market, people were even saying that the government is supposed to do something to prevent the stock market from going down, which is a ridiculously absurd idea and very anti-capitalist, because financial markets move based on the natural cycle of supply and demand. The US dollar index chart on the monthly time frame is somewhat of an inverse of the stock market, and from that same point around March or April of 2009, the three waves have been going down, while on the stock market those three waves were going up in a correction to the most recent move down. Well, what's really interesting right now is that if the stock market is about to turn and go down, if the US dollar is about to turn and go up, and if you've seen any articles by respected currency analysts such as this one by Evaldo Albuquerque, the article is called Short This Currency Now, and he's writing about the euro and why he expects that if history repeats itself, the last time that the European Central Bank raised interest rates, there was a huge drop in the value of the euro over a fairly long period of time. So if the US dollar is possibly about to begin a path going up against other pairs, and if the euro is about to be weakening against other pairs, then the euro versus the dollar may be a very good pair to be looking to go short on right away. as soon as there is a proper signal that this is in the process of happening. Now, if you're involved in trading financial markets, such as the Forex market, and if you're looking at different currency pairs or different financial equities and you're going through different time frames, you're definitely going to see these patterns that resemble Elliott wave patterns of trends and corrections. But the problem is they're kind of vague, and they're all these kind of little distortions of pattern, little pieces of chaos here and there. And if you've ever tried to use Elliott wave theory to enter and exit trades, you may have found that it's like trying to solve some kind of impossible Chinese jigsaw puzzle, and you end up frustrated, and the rules just don't work out many times, and you end up decreasing your profitable trades instead of increasing them. This has definitely been the experience of many people who have thoroughly studied the best Elliott wave training in the world. And even the best Elliott wave theorists who publish their analysis always seem to have multiple possibilities for what is about to happen. If you've ever had this experience, or if you've ever been involved in trading financial markets using any type of a strategy, the reason that you may have experienced this difficulty is because you are not able to see all of the picture that you need to see in order to make profitable trading decisions on a consistent basis. The experience of making a new discovery or breakthrough in trading, when you discover what's missing and when you see a solution that really works and you actually go back and test it over time on multiple time frames and see that it has worked in the past, and then you actually try it in your account moving forward in real time and have the experience of confidence that you really can enter and exit trades over a long period of time with a high percentage of winning trades. The feeling of excitement that accompanies that experience is sometimes overwhelming. I believe that the key to success is not any one particular trick or indicator doing something, is not any one particular tool, but it involves developing a skill, having patience, practice, discipline over time. When you're ready to have that experience and breakthrough in your own trading business, just go to forextradingseminar.com.